Good morning, traders. Welcome to the market forecast. It is Monday, August the 2nd. I'm John Hoagland. As always, thanks for trusting me with your time. We're going to be looking for accurate context in these markets, looking for good risk management, and always holding on to good patience. Good patience. Good morning, everyone. Hope you had a nice weekend. Hope you got rested up, had a little bit of fun. We do work hard for this. We deserve to have some fun. And we're just coming into Monday here. Monday is typically not my best trading day, but if you are in the markets already, hopefully you've got things heading your direction. As far as economic numbers due today, 8:45, the PMI manufacturing index due out a little bit bigger at 9 o'clock Central Time. The ISM manufacturing index due out along with construction spending. Just taking a look at what we were facing as far as economic numbers this week, it's a little bit thin. We don't really have much on Tuesday or Wednesday. We've got factory orders on Tuesday. That's at 9 a.m. Central. ADP as usual at 7:15 on Friday. On Wednesday at 7:15. PMI composite final 945, not looking all that impactful. ISM service index probably not impactful. EIA as usual at 9:30 on Wednesday. We have international trade in goods and jobless claims at 7:30 a.m. on Thursday. And then Friday, probably the day we're all looking forward to, is the unemployment numbers due out at 7:30 Central Time. As far as news is concerned, apparently we are getting closer to a Senate agreement on the infrastructure bill. It's got equities looking a little bit cheery this morning, looking pretty good to the upside as far as the equities are concerned. But there are still barriers that remain as the House is trying to attach another 3.5 million trillion, I should say, spending package to that deal. So there's going to be some potential headline news all through the week this week as they continue to wrestle about those bills. Earnings today, nothing very impactful. We have HSBC already beating earnings this morning. Global Payments, Lowe's has beat earnings per share. Not a lot, nothing huge or impactful. Just a nice long list for us on a Monday. Crude prices are lower, apparently being blamed on a Chinese slowdown as COVID measures weigh on crude oil demand. As always, make sure you like, share, comment, question, and heckle. And it's all welcome here at the market forecast. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Taking a brief look just a few minutes ago at the VIX, the dollar index, and the 10-year yield. VIX up a little bit, almost 2% at 1855. I find that a little bit unusual for the equities, looking to open a little bit higher. Dollar index keeps slipping down below 92, 91.99, and the 10-year yield continues to slip lower, 1.21%. As always, I got to say good morning to everybody. Jorg, first one in the room. You win the prize. Tone, Raven, Daniel, Thomas, Tanya. Good morning, Tanya. Bill, George Adams, Harry Gordon. I got an email from you, Harry. Looking forward to kind of talking about some of those things on the group coaching here on Wednesday, which, by the way, I will put the link in. If I still have it here. No, let me put it in. Make sure this is the right one. And here it is. For those of you interested, we get a group coaching session on Wednesday at 1 p.m. Central every Wednesday. Let's see here. Harry, Jim, Brian, Bob Williams. Good morning, Brian. Chef Magallanes is in the room. Jason, Jerry is awake. Hopefully John is too. Nelson Benitez, good morning. Saral, James Sajor, good to see you. Diver Fed, Janus, Greg H. Today is your day, traders. Lacey is chiming in, saying good morning to everyone. Alan, good morning. Vince, good to see you. Nico, a couple of new names there. Welcome to the market forecast if this is your first trip. If not, thanks for just popping in and saying hello. And let's jump into our charts here, as always, starting with the daily in crude oil. All right, so coming off a little bit of that high from last week. Now, failure to accept price above this weekly kickoff level has me keeping it at 74.10. 74.10 still the weekly kickoff level. Last week's high just above that 74.23. Already the market kind of testing up near weekly kickoff high, finding some sellers up there. We are largely still kind of range bound here. I mean, we do have a short time frame upside structure that does remain. But in the medium time frame, I'm looking at this whole thing as more of an area of balance and opportunity for traders to kind of look at the extremes of this balance to manage the risk. Volume and open interest lower at important level. We did add 4,700 in open interest Friday. It may be telling us that there may be some continuation or some potential energy building in crude oil, if you'll pardon the pun. Take a look at the 30-minute chart. All right. Settlement all the way up here, 93.95. It is exactly at our overnight high. We've got some shorts, overnight shorts. Okay, we've opened. Looks like we've closed the gap right on the open. So I'll be kind of monitoring to see if we can get some of these overnight shorts to get a little bit nervous to take us back up near settlement. This is a pretty high target area here. There's probably going to be some fish over here if we can bring price to this level. We have settlement, we have value high from Friday, we have weekly kickoff high and last week's high pretty tightly close together, and that's going to be kind of a confluence, and maybe we're going to be able to find some fish up there if we get the opportunity to see price there. Again, we've opened with a gap, we've closed the gap, but with no acceptance inside yesterday's range, we may see our overnight shorts see some continuation to the downside. Anything is possible. Nothing is 100%. In futures trading, take a look at the E-mini S&Ps now. All right, obvious. These markets just kind of go up when things are not going bad, right? So we've got the upside structure, largely still intact. We've been kind of suffering a little bit of difficulty in moving the market higher. Short time frame balance, we're in about 5 or 6, maybe 7 days of balance here. Open interest mostly maintaining over the last 2 weeks. So no drop or no real gains in open interest just says that this market is probably doing a pretty good job of evening inventory while consolidating. Take a look. Friday we added approximately 8,400 in open interest. Not hugely impactful, but perhaps a little bit of an indication of a tendency to start to create a little bit more open interest and a little bit more energy in this market for when we do finally break out of last week's range. Very tight range last week. E-mini S&P's 30-minute chart. Settlement. 43.89.50. Put that on your charts. We've got some overnight longs. We are at risk of, or there is a probability of, opening with some kind of a gap. And if we can't close that gap, I'll look for the opportunity to see if maybe we can find some fish up here at last week's high. If we can't do that, if we kind of re-accept inside value from yesterday, our overnight longs might take us to an opportunity to bring us back down to settlement, which I'm not really viewing as a good opportunity, as it is the point of control from Friday as well. So, as usual on Monday, I'm going to be very patient and look for just something to come to me. I'm not going to go looking for trades today. I'm going to make sure that the trade I take or the trades I take are going to come to me and say, hey, look at this. We know that the extremes of the balance area we are in are basically last week's high and low, which are presented with these purple lines here. And we're pretty centrally located. We've got some work to do before we're going to see a really good opportunity. And I'm looking at mostly finding fish at these extremes. NASDAQ. All right. Short time frame. Oh, we got to get the daily up here first. We start with the farthest. So again, short time frame balance, over interest lower on Friday. Volume was actually a little higher on Friday. So with the drop in open interest, I think there's a little less probability of directional activity until we get outside of, yes, you guessed it, last week's range. It does appear that with higher lows and lower highs, this market is beginning a coiling, energy building series of potential trading days. So take a look at the 30, see what we're seeing, if there's anything that looks interesting here. Again, we've got last week's high and low very tight, very close together. Weekly kickoff levels probably more closely looking to the downside than the upside. We've got a lot of space up above. As we all know, we're just basically hanging just under all-time highs. The market is just waiting for new information. Again, be cautious. Headline risks are probably a little high this week with the infrastructure package going through Congress. So looks like we're going to be opening with a gap. If gap rules rule, if we can't close the gap relatively early, we'll see the market continue this move to the upside, which could give us an opportunity to go fishing over here at the last week's high. Again, a move back to settlement is interesting, but not all that great because it's going to be centrally located in the range. And we do have some confluence here, but it's very kind of rangy confluence. So there's nothing that's that close together that I'm that interested in jumping into right away. Watch the opening range. Watch the opening range. Because we were opening out of balance, the opening range trade may be a decent opportunity for us. That opening range is the first minute from 8 o'clock till 8:31. Whichever way we break out of the opening range, we try and head for that direction. Opening range can indicate buyer or seller control early in the session. And when we open out of range and balance from the previous session, you may see a little bit of a higher probability. The opening range can be pretty substantial as far as its range is concerned, so it can be a tricky play for you. Gold. So, still range bound, still short time frame controlled. Rollover is largely over. I'm going to just continue to keep working the extremes in the longer time frame. Of course, weekly kickoff high and low remain the same. Actually, I think we've raised weekly kickoff low just a little bit, but they're very close to last week's ranges. This is actually up here. So last week's range just inside our weekly kickoff range, or just outside our weekly kickoff range. How does this move? I don't know why that moves. Lost 22,000 in open interest, but 14,000 of that was in the August contract, which is expiring. So technically we lost about 6,000 in open interest, which is a pretty substantial number for gold. We were looking at a potential move above the weekly kickoff high last week that failed. We lost 6,000 in open interest. Makes sense. Maybe we got a little bit too long up there and we've evened things out. Take a look at the 30-minute chart. Looks like our opening range trade here in gold, this is the low of the opening range, just got taken out by just a couple of ticks. What are we looking at here? There was a pretty volatile moves last week in gold without actually going anywhere. Settlement is here. Put that on your charts, 18, 17, 20. We've got some overnight inventory to the short side. Have we closed the gap? We have not. If we can't close the gap relatively early, we look for opportunities in the direction of the gap, which would have us looking to sell strength. I'm going to be real cautious in this because, again, when we're looking at weekly kickoff, the range from last week, we're right in the middle of it. And, like we were talking about last week, if this was a tennis match, this tennis player is always going to come back to the middle of the court. Because if they get a volley on the right side or the left side, he's probably put in the best possible position for that, and that's kind of where we are here. We've rallied, we've volleyed to this extreme. Are we going to volley to this extreme now? Those are going to be my more important levels that I'm going to be more interested in looking at for opportunities. Again, I'm going to stay patient today. Okay. Excuse me. My goodness. Okay. The euro. We're kind of looking at a potential for a bigger move. Our weekly kickoff level for last week at the high here was 1871. So 1871 was just about here, and we had a breakout above that on Thursday. Friday, we traded basically right back to that support level, back at it today. We have an inside extended trading hour range so far. So really, I'm kind of still have a little bit of focus on that 1871 weekly kickoff high from last week. I'd like to see the market hold above that level, so that's going to be somewhat pivotal. 1871, again, that number, pretty close to our low for the last couple of sessions. Again, with this breakout to the upside, there's a kind of a first stage break of this downside move. And if we continue, we could, if we continue to bring in volume, bring in business, that we could indeed come and check weekly kickoff high for this week, which is all the way up here at 1981. I remember that year. Take a look at the 30-minute. So we don't have any gap. We do have some overnight longs that seem to be reconciling as we speak. In range, I'm going to try and stay patient. It appears as though we may have a little bit of fish down here near yesterday or Friday's low settlement point of control. We have a little gap just below that. So this looks like an interesting area to look for an execution. And if we get the opportunity, I'll see how things look down there. But I'm not in any big hurry again to try and get into this because we're in range. We're in, a little outside of value, but we're just taking a little bit of a test to look at back into value. This might be an interesting spot for a kind of a smaller, faster trade if we're so inclined. All right, the 10-year, and we're out of here. Upside structure, I should say, remains. We're seeing higher lows. We're seeing higher highs. We're seeing the yield continue to kind of creep to the downside. That's going to put buying pressure on the bonds here. Open interest indicated some squeezed shorts on Friday, I should say. We lost 8,700 on an up day that kind of created the upper extreme for the range. So maybe we had some preeminent shorts up against this level that maybe got a little bit squeezed out on Friday. Take a look at the 30-minute chart, and we'll get down to business. Settlement, 134.14 and a half ticks. Just a kind of a mess in the overnight. No real overnight inventory. If we're starting to get one, we may be looking a little bit long. I'm liking the fact that we have the opportunity to see an execution or potential execution here at the weekly range high from last week. The high of the week could be an interesting opportunity for us. Again, we may have missed that opportunity. We're seeing the market continue to move higher as rates continue to move lower. So what I'm going to be really watching for is, and if I watch it, I'll miss it. But I'm just going to see if we can get some sort of continuation above last week's high. There it is. We just had a decent look at it in the last hour or so, but the market driving away from settlement. So, all right. So it is just Monday, just getting into the week. We're looking forward to having a successful and profitable week for everybody. I got a couple of questions here. What does settlement price? Murph and Greg, thank you for answering that question for me. That's wonderful. Yeah, it's in essence, it's where the exchange attaches price to address margin. And it's kind of a base price. This is where the market closed on Friday, and you can get a kind of a clue as to what the short time frame traders might be doing or thinking if the price moves significantly far away from settlement. You're gonna have a pool of shorter time frame traders on the open that are holding long positions or short positions, and that can be pretty useful for us. Thanks for answering, though. And as always, thanks for coming into the forecast. We took care of a lot of business real quick right there. So let's take our deep breath. Remember, stay humble, grateful, and creative and patient in your trading today. Mondays, not my best. I'm going to be patient. I'm going to wait for the market to come and say, hey, look at this. I'm not going to go looking for trades. If I look for trades, I'm probably going to find a lot of them, and they may not be the good ones that I'm looking for. So be ready. Get out there, profit. We should see Dan for the market recap today at 3 o'clock. We got Coach's Playbook next on Tuesday. We've got group coaching on Wednesday. It's a busy day in the markets here at Top Step and here at the Market Forecast. So get out there, profit, and trade well today. We'll see you later.